Welcome, this is BloombergQuint. Well, Tech Mahindra has come out with earnings which have beaten expectations, with the bottom line ahead and higher than the highest number that we've seen. So it certainly is a positive surprise for investors of Tech Mahindra. But to take us through the earnings for this particular quarter and what we can expect going forward, I'm in conversation with Mr. C.P. Gurnani and Manoj Bhatt here. Thank you both for joining us. Well, C.P., I'll start with you. You were just talking to my editor, Menika Doshi, a few days ago, and you were talking about the 5G trials. What updates can you offer us as far as the allocation and trials is concerned now?
So, Agam, clearly growth which is the best in the last 16 quarters. Tech Mahindra team has not only delivered phenomenal results, particularly on the growth side, where the telecom team is almost 9% quarter-on-quarter growth. 5G, I would think that the company has made huge investments in the labs and creating an alternate, which is a software-defined radio networks. We have started doing trials with about 6 customers as we speak right now, and which was about 2 when we spoke to you last quarter. So it clearly shows that people are interested, but it is new technology. And the established hardware-based solutions versus an hybrid solution, I mean, it will take time. And number 2, the industry is yet to take off. Right. So I think 2020 will still remain what I would consider it as a relatively softer growth as far as 5G is concerned. But there are opportunities. I mean, there is a whole lot of migration that is happening in the industry, whole lot of modernization which is happening in the industry. And Tech Mahindra, through its investments in AI and digital, is ready.
I'm not going to ask you for a guidance, but I do want an idea about FY21 holds, especially given you are sounding positive right now. Does that mean that growth can take off, and can it be possibly better than FY20 with respect to when considering what you are already seeing right now?
The team is striving hard, running hard, and will continue to. I mean, there will be a little bit of ups and downs in the quarters, because some of my business is, as I've already indicated to you in the past also, but on the net annual effect, I am more optimistic.
Manoj, a lot of deals signed over the past few quarters, and of course the results are showing up on the top line. But the question is that there will be some costs related to these deals, and which is why a lot of analysts were expecting margins to remain flat. That has not been the case, as we've seen a little bit of an expansion. Can you give us an idea about how these metrics work out there and have worked, and what we can expect going forward as well?
So I think firstly, just as a context, right? So we have had 2 quarters of extremely strong deal wins, and within those there have been 2 very large deals in each quarter. So when each of these events happen, I think there's a bit of investments in terms of just making sure that we actually handhold and start the engagement, transition the engagement properly. So that's the cost investment we are making today, and that's why I think we have communicated that in the past too. So as I look from here, I think clearly that's something which we hope to recover going into next year, in terms of some of those investments will not be required and we'll go into a steady state mode. Secondly, of course, synergies from portfolio companies, I think that's another thing which is contributing to deal wins, and that's a good sign both from a revenue perspective as well as a margin perspective. And lastly, I think from our perspective, if I think of it, utilization is at an all-time high. I think clearly our focus on operational performance and keeping it very, very tight, even though we are actually, if I look at revenue growth and headcount growth, I think there's clearly been delinked if I look at this year. So clearly some of those efforts are also on. So to me, I think those would hopefully help us recoup some of the margins we have lost during the course of this year. And that's where we are aligned, and that remains our goal.
Can you also give us an idea of the pipeline right now?
So from a pipeline perspective, we never disclose the size, but to me, I think we have said it in the past. I think from a pipeline size perspective, it's been a steady and quite strong over the last few quarters, and that's what remains. And we'll have to continue the conversion at the same rate. Yeah.
Mr. Gurnani, there's also been reports about Tech Mahindra signing a very large deal with an insurance company. Can you tell us anything about this? Of course, the report says this is with Jackson Insurance, and I don't know to what extent you can come out and be open about it, but it's worth around $800 million, the deal. What can you tell us about this, sir?
So, we are very, very happy that the last quarter, we announced the telecom deal, which was the largest that we had signed in the company. And this quarter, we announced a $900 million deal, which is with an insurance major. And this is all about digital transformation and managed services. So we're very excited, and it is a multi-location deal, and it covers practically some of the very, very large countries and geographies around the world.
Okay. Manoj, I reckon that this deal comes into play in the fourth quarter. Will it show up in the books immediately?
I think there will be a period of time. I think part of it is already in Q3, but I think we'll see ramp up going into Q4 as well as potentially Q1. And as with this, I think that's our best estimate at this point, and we'll have to see, because ultimately our goal is to make sure that from a customer perspective, we do this with the least bit of disruption and make sure that the transition is smooth.
Okay. A final question then, Mr. Gurnani, is on the auto sector. You do have significant exposure to that. What is your observation here in terms of the world markets here?
I mean, it's an interesting market at this stage. On one end, we are seeing the need for, changeover to electric vehicles or the alternate fuels driving a segment of the market. On the other end, we are also seeing increased competition or less consumption. So there is clearly a market which is going to restabilize and reposition itself. We are involved with a few majors around the world, and different territories, different reactions, but this quarter has been good, which only shows is that the services that we offer, which are more integrated, onboard systems of the automobile vehicle. And number two, some of the solutions that we have, like warranty management system, which is rolled out across the different levels to increase better accountability, better productivity, better efficiencies, are gaining a fair amount of traction. So as I said, no uniform indicators. So some people are still investing in modernization, but most people are more focused on efficiency.
Okay. All right. Well, gentlemen, thank you so much for joining us and taking us through the quarters.
Thank you.